In this presentation, I'm going to walk you through the 5 things you need to do to start building a secure financial future. It doesn't matter what background you have in terms of education or work experience, I break everything down for you. I will make this easy for you. The first thing is, if you have credit card debt right now, your job is to get rid of that first and foremost. Those carry loan shark rates, and you need to get rid of that before you do anything else with your money. And that includes curbing your yucky spending habits. And I know you have yucky spending habits because you have credit card debt. You have to start living within your means again, distinguishing between needs and wants. It's time to get back to basics. So what does that mean, getting back to basics? Well, once upon a time, we were all in high school and living off cash. We didn't have credit cards and we certainly didn't finance our lives. We either had the money to do something or we didn't. And if we didn't, too bad. We had to find cheap ways to entertain ourselves. We were all once capable of doing that. We are certainly capable of doing that again. Once you have ridden your debt, you have to establish an emergency fund. This is number 2. Ideally, 3 to 6 months worth of expenses, and that money should be in a high interest savings account, separate from your bank account that you pay all of your bills in. If you're in a high risk job or you have dependents and you are the sole breadwinner, lean towards 6 months of expenses. The third thing is, and this is the fun part, get to know what you want. This is where you dream a bit and think about your financial goals and have an idea of when you want it. What do you want in the next 2 years? Are you getting married? Do you want to buy a house? Or just simply want to start saving and investing your retirement? It's very important to be able to distinguish when you want your goals to be achieved because the money for your goals 15 years down the road will be different from the money allocated to the goals you want to achieve 6 months down the road. And there's a saying out there when it comes to financial planning. If you don't know the destination, how will you know you've arrived? Getting to know what you want is part of financial planning. For example, if you're saving up for a down payment on a house that you are planning to buy this year, you are putting that money in a savings account. Your retirement money, on the other hand, that is, if you are planning to retire in over 10 years from now, should not be in a savings account. That money should be invested. And what if you don't know what you want? Well, then put that money to work anyway and invest it, but with the intention that you won't be touching it for at least 5 years. You want to give it some time to let it grow, just in case you're caught in a downturn in the markets. And I will talk more about what that means later. I want to keep stressing this. When you are investing, you are thinking long term, like 10 plus years. Slow and steady wins the race. Time is your best friend when investing. And so this brings us to the 4th point. What will you be investing in? The stock markets. Investing in the stock markets is one of the easiest ways to make money. And when I say easy, I mean it is the least labor intensive. It is one of the few ways out there that allow you to eat, sleep, go about your day while your money makes money for you. You don't have to sell anything to anybody. You only need to sell yourself on this. You are the only person you need to convince to do this. And if you do it right, it pays off huge. When I talk about investing in the stock markets, I'm not saying invest in individual companies. Most people should not be picking their own stocks. You should be investing in many stocks across the board in a low-cost, diversified fund. So in the event one company goes under, your portfolio will be okay. So that's what you should be investing in. Low-cost, diversified funds, specifically indexed funds. And it's very easy to do. If you can buy stuff on Amazon, you can certainly buy these index funds on your own. Finally, you have to get into the right mindset. Like everything else in life, it usually is the toughest part. But in this case, it's usually due to a lack of education that caused people to fail at investing. Educate yourself a bit. You are your own worst enemy when you are investing because you choose whether to hit that sell button or not. And there's always that one friend that says, I know someone whose family lost their entire savings in the stock markets. No, What they should be saying is, I know someone whose family lost their entire savings in one company they invested in that went bankrupt. It was probably Nortel. If it was recent, maybe it was Sears. Yes, the stock markets go up and down every day, every week, every month. They fluctuate. This is volatility, and that is the risk that comes with investing. But over the long run, the stock markets have gone up and has recovered from all of the recessions, the depressions, and the elections, despite how many people thought the world was going to end in any or all of those cases. The stock markets have always made a recovery and then some more, which is why it's so important to hang on, be consistent, and give yourself time, no matter what happens. Remember, slow and steady wins the race. The US markets has returned on average over its entire history, 10% per year. That's a straight line average, meaning the markets could have returned 20% in 1 year, been down 12%, up 5%, down 15%. If you average every single one of those numbers up, you will get 10% per year. In Canada, that number is around 8% per year. But never in the history of the stock markets has it ever gone to zero, nor will it ever, unless, of course, something crazy happens like a zombie apocalypse. If that's the case, we'll all have much bigger problems. None of what I'm saying will matter. Remember, you are your own worst enemy when you are investing because you have the power to act or not on information you just so happen to stumble upon. If you knew you would not get wiped out of your investments, you would not sell on panic. In fact, you'd probably embrace it. The key to being successful at investing is being consistent, and if you can, take advantage of down markets. That's when stuff is on sale, so you should load up even more because you are then lowering your average cost. The bottom line is investing in the stock markets is imperative to wealth building, and the difference between investing and not investing is astounding. We are talking about hundreds of thousands of dollars, even millions of dollars over a lifetime. So you don't want to be selling yourself short on this and miss out on all that time your money could be working for you. As I said before, time is your best friend, so you'd want to get started as soon as you can. That's it for now. I hope you found that very useful. See you later.